where we break down what's happening in real estate right here in Wisconsin and Northern Illinois. I'm Vince Devall with the Eagle Homes team, powered by Caldwell Banker Realty.
And I'm Brewer. Today we're going to be tackling one of the biggest questions we hear from buyers. Did I miss the boat, or should I wait for the rates to drop? We're going to comparing mortgage rates today from 23, 24, and 2025 using real Metro MLS data. That's the multiple listing service for those that don't know. Data across Wisconsin to see what's really changed and what happens if you wait even longer.
Yeah, and I used all of Wisconsin, I used all of the Metro MLS. I didn't, break it down to like Walworth, Kenosha, Racine County. So just perspective, we're getting all of Milwaukee, some of North Milwaukee, things like that. But back in Q3 of 2023, rates were around 7 to 7.5%. Buyers were struggling with affordability. Sellers didn't want to give up their 3% mortgage.
And then by Q3 of 2024, rates dipped slightly into the 6.5 to 6.75% range, enough to bring some buyers back, but still high enough to keep inventory tight.
Yeah, now
there's reasons for that, of course.
Yeah, now Q3 of 2025, we're sitting right around 6.25%. It's not a massive drop, but the market has stabilized. More homes are hitting the market, and buyers are starting to re-enter with more confidence.
Yeah. Before we get into all the numbers, though, let's quickly explain the difference between median and average as far as your price points, because you're going to hear both that today, and you'll hear that a lot.
Yeah. So the median price point is the middle point. So half the homes sold for more, half the homes sold for less. What is that middle dollar? Gives us a realistic picture of what a typical buyer pays.
It's about the best explanation I've ever heard of that. The average price adds up to every sale and divides by the total number. So simple averages, right? So a few luxury homes can pull that figure up.
Yeah. So really want to look at the median home price versus the average when we're talking about this, but we're going to give you both as we go through this. So the median shows that affordability, where the average shows the broader market trend.
Here's the reality for buyers who waited. In 2023, the median sold price in Wisconsin was $305,000. By 2025, that number climbed to $345,000. That's a 13% increase in 2 years. To put that in perspective, and this is where I get asked this question a lot. So yeah, what is the average annual appreciation rate? Well, again, huge.
We'll get into it, but yeah,
we're going to get into it. But that's 6.5%. That's 6.5% over
2 years
annually for 2 years. That's a lot. That's still a very high appreciation market,
right? And the average sold price rose from $373,000 roughly to $421,000, and that's up 12.6%. Once again, about 6%. Even though rates are lower now, home prices have outpaced that savings. So if you were looking at a $305,000 home in 2023, that same home today that might cost $40,000 more, raise your monthly payment by roughly $300 to $400, even with slightly lower rates.
Exactly. Appreciation often outpaces rate savings. Waiting can quietly cost you tens of thousands of the life alone.
Yeah. Now let's jump into the Metro MLS and what it means. So the Metro MLS showed 7,238 sales across single family homes, and this was I apologize, it is 2023 data right now. Okay. 2023, 7,238 sales across single family, multifamily, and condos. Okay. So we're eliminating vacant, commercial, rentals, things like that.
So we're sticking really just residential minus the
correct.
vacant.
Correct. And with that, we talked about it, 305,000 median sold price with an average sale price of 373,000. But most of the homes then were selling at 101% of list price. So 1% over list price. But in days on market, it was very aggressive, 20 days on market. It was still, obviously 2 years ago, a seller driven market, fast sales, strong competition.
Yeah. So basically, I would even say 2023, that was definitely a strong seller's market, right?
Yep.
So now moving to these are 2025 figures.
2024
figures, excuse me. There were 8,353 sales. The median increased to 325,000, so $20,000 increase on the
Yep.
median, with the average of being 389,000, just under 390,000 essentially. And the days on market of 22 days, so very similar in days on market as well. Inventory did improve slightly, but obviously by those rates or by that information, demand remained very strong.
Yeah, and then we get to this year, this past third quarter, we had 8,475 sales.
Mhm.
So down a little bit from up a little bit, sorry, from last year. And the median sale price drove another 20 grand up. We were at 345,000 with the average price point of 421,000. So we went up 20,000 median, up almost 40,000 or 31,000 in average. Days on market were 23 days. So homes still selling close at 100% of list price, but a healthy appreciation and a more balanced market.
So if you're a buyer, waiting for those rates to drop, it can be a trap.
Yeah.
Even a 0.5% rate drop won't offset a 5 to 10% market jump in price.
Yeah, it's kind of crazy. And for sellers, pricing and presentation are everything. Mm-hmm. Homes that look great and are priced right are still selling fast and strong.
Yeah, because we do get that question, right?
Yeah.
Is it a buyer's market still, or is it the seller's market still, or are we in a buyer's market? And that's exactly the areas where our team helps, combining strategy, marketing, and the data to get on top of those results.
Yeah. So what if you waited another year, Brad? What do you think was going to happen? Let's say rates stay around 6%, mm-hmm. but home values rise another 5%.
Well, that $345,000 home today would now cost you $362,000. So you're looking at another $17,000 increase.
Yep.
Now, into your payment, that's an extra $40 to $45 more over 30 years, of course. We're based on a 30-year calculation.
40 to 45,000.
40 to 45,000 over the 30 years.
We have a script here and he struggles with it.
Yeah, I read that wrong.
Yeah. It adds about $110 to $130 a month to your mortgage payment.
Correct.
I mean, think about that. That is, gosh, that's your internet bill for some people. That is utility bill, whatever it might be. So, and with a fixed budget, that 5% increase cuts your buying power by 5%, right?
Yeah. So a buyer can afford $345,000 today. May only qualify for $328,000 next year.
Yeah,
that's a smaller home or fewer upgrades.
Right.
Yeah,
smaller home. Maybe not move-in ready. Maybe the quality's not as good. But bottom line, so time in the market beats timing the markets.
Correct.
I think that's great. We talked about in the last couple of years. You are going to marry the home, date the rates. Mm-hmm. People that bought at 7%, 7.25% 2 years ago should be looking at refinancing today.
Yeah.
Because they probably have 10% more equity. So if they put 10% down, they're 20% in now. They can refinance, get a lower rate, save on a monthly payment, and potentially get rid of PMI. It's a great opportunity. So,
and without looking at the data, we've talked to our lender friends, and we're hearing I got some refis going on right now.
Yeah, they're almost more refis than they do purchases.
Yeah.
So it's great time for that.
But overall, at the bottom line is ownership builds equity.
Yeah.
Waiting erodes it, essentially.
That's great. That's a great way to put it. So whether you're buying your first home or your fifth, now's time to plan smart. The data proves it. I mean, we're showing it to you, data showing it to you. Ownership continues to win long term.
Yeah. That's been the standard for over 100 years.
Yeah.
So we'll post the Metro MLS stats and cost of waiting graphic in our show notes when we launch it out on our YouTube channel.
Yeah. So thanks for listening to the Eagles Nest podcast. I'm Vince Devall with the Eagle Homes team.
And I'm Brad Brewer. Until next time, stay informed, stay confident, reach out if you need anything. We'll see you later with Eagle Homes.
Thanks, guys. Have a great day.